Welcome back. Deepan Mehta of Elixir Equities is now joining us. Deepan, good afternoon. You know, the stock that's puzzling everyone right now is Reliance. What do you mind is happening here below 1900 now?
Yeah, good afternoon, Anuj. I think that is puzzling everyone, me included, because fundamentally, I think nothing has deteriorated for the company per se. It's just that I think there was a time when Reliance was the only game in town and everybody was chasing the stock. But now I think many ideas have come through. And with banking sector and bank nifty starting to do well, that's a huge guzzler when it comes to absorbing secondary market inflows which come through. So I think it's just that the rally has got more broad-based. Earlier it was concentrated in Reliance, and now I think that's taking a bit of a break at this point of time. And after such a spectacular up move, it's only natural that there could be time-wise, price-wise correction. But other than that, I think nothing has changed as far as the business model or the underlying fundamentals or the growth trajectory is concerned. So you have to be a bit patient in the stock at this point of time and wait out this particular lull period. At some point of time, a few months from now, you could again have further triggers coming through in Reliance in terms of developments or progress they have made on the various platforms, and maybe some unlocking of value or at least a timeline for the IPOs for the new digital business as well as the retail business.
Yeah, or probably a foreign listing. No, I take your point. I mean, for us, Reliance was our NASDAQ. And if money is shifting from NASDAQ to Russell 2000, then we should be prepared for some churn over here as well. That argument is fair. But actually, from one of the oldest stocks on the exchange to one of the newest, the generic injectables focused company Gland Pharma made a strong debut earlier today on the exchanges. Sonal Bhutra is here to tell us the financials. Hi, Sonal.
Hi Lata, good afternoon. Thanks a lot for that. Well, yes, it listed at 14% premium to its issue price, and now it is higher by 20-odd%. Adding on to that gains, right now the promoter stake has fallen to 58% from 74%, and at this level, the company is trading at 28 times FY22 forward earnings. And in terms of valuations, it is at par with its peers. The net proceeds will be used for working capital requirements, for capital expenditure, and general corporate purposes. Just some data about the company. It's a generic injectables company which is present over 60 countries, and most importantly, it's a business-to-business model rather than B2C model, and they get maximum of their revenues, that is 63%, from the US markets. This is followed by India, Europe, Canada, Australia, and rest of the world. Now on the financials, well, the financial performance has been quite strong in last 3 years. They have clocked in compounded annual growth rate of 27% as far as revenues are concerned, 37% as far as EBITDA is concerned, and profit growth of as much as 55%. Also on the balance sheet side, the company is a net cash company. In fact, we spoke to the management in the morning and they said that they expect margins at 33% to be sustainable over coming quarters, and growth for the company will also be the same as they saw in last couple of quarters. And the net cash that they have in the balance sheet will be used for growth opportunities and also for further inorganic acquisitions that they are looking at.
Okay, got that. Thank you very much, Sonal, for wrapping it up nicely. Let me toss that to Deepan. Deepan, it's listing higher, but Sonal's estimation, I mean, she's looking at a lot of earnings forecasts and says it's fair. What do you do, Gland Pharma and pharma in general?
See, Lata, we've been very positive on pharma, no doubt about that. And there is enough scope for most pharma companies' stock prices to move up. And we are quite impressed with Gland Pharma's business model. And one thing which we should highlight over here is at the time when the entire pharma industry was going through stagnation and correction mode with flat to declining profits, Gland Pharma, that 2014 to 17 period, actually had significant earnings growth. And the segment that they are in, injectables, is absolutely the best, highest value added segment with least competition. And they have a completely well integrated manufacturing process. And the parent company, the Chinese parent company, also is very strong in terms of technology, management support, financial prowess, and all the other criteria. So it's just that maybe the IPO did not do well, perhaps because of the anti-China sentiment, and there are some lingering concerns about if there was a certain regulation on Chinese imports or Chinese ownership of companies, then that would certainly impact Gland Pharma. But as and when those threats and concerns recede, I think Gland Pharma will find its way into a lot of portfolios of investors, institutional as well as retail. It is an absolutely high-class company And although we've not bought it, it's certainly there on our market watch list. And maybe at corrections, or maybe once we have a couple of quarters of earnings and some visibility and understanding of the business model, one could look at buying into the company. So very positive on Gland Pharma and also other pharmaceutical companies per se.
Okay, by the way, before we take a break, just look at Infratel. It's now approaching the 20% freeze. Of course, this could be in fact, in the cash market, it's already done that. In the futures, it's not done that. In the cash, it's already done that. And I guess that would be it for the day, because there won't be enough time after that for the freeze to be open for the 25%. But it's really been stock of the day and by a mile.
Absolutely.
So that's of course our stock to track since morning, by the way. We'll take a break and we'll come back with the market closing.